Welcome to the Blockcrunch podcast, the go-to podcast for investors and builders in crypto. And before we get started, just a reminder for you guys out there, the Blockcrunch podcast is intended for informational purposes only. Neither the host nor its guests are licensed financial advisors, and nothing discussed should be construed as financial advice. Views held by Blockcrunch's guests are their own, and sponsorship messages do not constitute financial advice or endorsement. With that out of the way, let's jump right in. Now, before we get started with today's episode, I've got some great news for you. Now, a lot of you have been asking for how I analyze projects that I bring on the show. That's why I decided to create Blockcrunch VIP to share with you all the heavy research that goes on behind the scenes. Now, every week or so, our team prepares an in-depth research memo with things like sector analysis, technical concepts made simple, in-depth competitor breakdown, and even interactive models, so you can learn about the most important projects before they become important. And our team is putting in hours every week scouring Discord, Twitter, forums, and blogs to help you get an edge in crypto and understand the latest projects and themes at the deepest levels that goes way beyond just an interview. Now, in addition, we'll also host exclusive AMAs with myself to answer any of your questions. So all of these are only available to Blockcrunch VIP subscribers. And the good news is that while our interviews will always be free, the VIP tier costs less than one coffee a day. So head on over to theblockcrunch.com/VIP or click the link in the show notes below to sign up. All right, hey everybody, welcome back to another episode of the Blockcrunch podcast. Now, I'm really excited for this episode because Cosmos is one of the largest ecosystems in crypto, and to date there are 200 plus blockchains or app chains building with the Cosmos SDK or with Tendermint, which is Cosmos Consensus Engine. However, there has been a long-standing discussion on Cosmos token, which is Atom, and its ability to capture the value that it has really created for crypto. So recently, a hugely ambitious plan called Atom 2.0 has been announced just last week to change all of that. So with me today are two OGs from the Cosmos ecosystem, Zaki and Sam, to help us break it all down. So welcome to the show, guys. Thank you so much for coming on. Definitely. Now, just to get us started, I remember when I first read about Cosmos, maybe like 3-4 years ago, there were nowhere as many layer ones. But today, the landscape has really changed. So I'd love to start by just helping contextualize what Cosmos is. And I saw this really interesting tweet yesterday that I feel like, I don't know if you guys agree, but basically Kyle Samani from Multicoin tweeted that Solana is like a fast global state machine, or basically example of that protocol thesis. And then Cosmos is the opposite of that, which is the app chain thesis. I don't know if you guys agree with that, or how would you contextualize Cosmos within all the layer ones today?
So I think like one of the things that has been unique about Cosmos is that we had a very distinctive vision for building blockchains that goes back to like Jay's original vision, and then built on by many other people who all had this pluralistic view of how blockchains should exist, i.e. that if that like the logical sort of instantiation of a blockchain is like a community or an application. And that was the natural architecture of blockchains, and that we needed to build this. We called this idea Cosmos, and we like value accrual was always like to do later, and the goal was to build the technology stack first, and so that's how we kind of got here. And so what Cosmos is almost, you can think of it, it's a set of components, but it's also almost a language for describing how to build and interoperate and like interconnect an L1 into a network of blockchains. So that's kind of.
I love that. And Sam, do you agree with that as well, or how do you see Cosmos in the context of all these L1s out there today?
Yeah, absolutely. It's a very different architecture. Obviously, it gives you a lot more control as an application designer, and I mean the expectation is that there's really going to be a lot of differentiation among this network of application-specific chains, and there's really going to be kind of greater specificity and kind of tailoring for specific market conditions. So yeah, it's kind of built as a next generation platform.
Yeah, I love that. And I think with all the conversations we have with developers and builders, they all love how customizable it is when they're building with Cosmos. But I'd love to quickly just pivot and talk about this new paper that just came out, which is Atom 2.0. Zaki, in a recent presentation, you said that the features in the new Cosmos will make EIP 1559 look quite dull in comparison. So I'm really excited to dive in here. Um, but first, yeah, but just to give some context, like where did this come from? Like where did this paper come from? Who wrote this?
Okay, so I would say let's just like kind of go back a little bit, which is so 2019 Cosmos Hub launches. So first proof of stake production blockchain running Tendermint. We also get Binance builds the BNB chain using the Cosmos SDK. Um, Polygon builds their chain Matic, their existing chain. Also, all of this stuff kind of happens around the same period of time. We have this whole ecosystem of, and people start baking the first Cosmos SDK chains as standalone applications, like Akash and Kava. They also launched during this time period. Um, and then 2020 is this, 2019 is kind of the Cosmos SDK go to market year. And then we're working on IBC, which is really the point. The idea was we built all of this stuff with the idea of these blockchains would be able to interoperate. But now in 2019 we have an island of standalone blockchains. Same thing in 2020. It takes longer than any of us anticipated, but the end of 2020, IBC is ready. IBC launches. Then nothing happens. Nobody really has a plan for what to do after IBC launches. And then Osmosis launches. And then after Osmosis launches, a giant forest of blockchains starts to come into existence because they can interoperate with Osmosis, exchange liquidity, an economy starts to form. We start getting NFT projects. We start get like Stargaze and Asset Mantle and Omniflix. And sort of the ecosystem really starts to expand post 2021. But there with the when the team left All in Bits Tendermint, the original development company, there's very little left there, and there were very few people. There were basically no people involved who were involved in launching the Cosmos Hub at all left at the company. All of us then, most of us started to build our own chains after in 2021 after Osmosis launched. And so, circling back at the end of 2021, for better or worse, a lot of us have like an emotional attachment to the Cosmos Hub, to Atom. And we're like, it seems sad to like let it just become remain the meme coin as like every other chain builds, pursues its app chain hypothesis, and Atom is just this asset that is used to like onboard from centralized exchanges into the ecosystem. Eventually, that's not going to be as important because eventually it was obvious that USDC and other things would come to Cosmos. So we were like, it's just like, okay, it's like maybe there's one world in which Atom like kind of rises, did its thing, birthed the Cosmos, and then fades away. But there were a bunch of ideas that had come to fruition that we had started kind of hypothesized about that you started seeing in the real world in 2021, like protocol controlled value, protocol controlled liquidity, and the other piece I would say is the whole MEV story. We had this idea of interchain security, a form of shared security for the Cosmos Hub, extending on the IBC protocol to the consensus layer. That idea had probably been around since like 2019, but a team had stepped up to build it, which had been cool. So we like all these pieces were there, and like the other thing, going back to Cosmos history, right, is like we come up with the Cosmos idea. I think we all kind of are like, we don't have a great value accrual story here, but we think we'll build something cool. Right, 2016, 2017 era of Cosmos. Gavin and Robert for Polkadot were like inspired by Cosmos, but they're like, we want a much more concrete value accrual story. And we were like, your value accrual story is stupid because anyone who has a really great product is not going to pay for a parachain slot. They'll like launch their own L1. And we were like, that doesn't make any sense. And so, all of these ideas had floated around for a long time about like what were good value accruals for like sort of, networks of blockchains kind of architectures. And when the PCV stuff and the MEV stuff started to become like a real thing, Sonny, Sam, lots of other people in Cosmos started really being like, oh, there's like a new set of primitives that we can incorporate into Atom and maybe really reshape its role in in the ecosystem. And so, basically 9 months of work sort of started with these kinds of ideas. Basically, this set of ideas, and they sort of eventually converged into this paper.
Yeah, I think that's really a great walk down memory lane because I remember looking at Polkadot and Cosmos way back, and I was really excited about Cosmos vision, but I thought, okay, the Atom token wasn't really investable at that time. And then I looked at the Polkadot vision, and I thought, okay, no one's going to pay for the parachain. So I wanted to kind of get access to this kind of cross-chain or interchain thesis, but I didn't really know how. And I think this paper kind of really changed that. But just want to pass it to Sam to see if you have anything to add on the history of Cosmos side.
One thing that was just kind of unknown, I mean, you kind of admitted it yourself, is like how these networks are going to scale. Like the Cosmos architecture is very kind of committed to horizontal scaling, but it wasn't quite known what was going to be required to make sure that the network was actually kind of fully activated. And that was like really left as like an open problem in the initial Cosmos thesis. And the idea was, okay, we're going to kind of like observe and try to address that when we have sufficient information. And so that's kind of like where this Atom 2.0 vision comes into play.
But no, yeah, thanks for that walk down memory lane. I think that was much needed context on this, and I'm really excited to dive into the paper. So, from my understanding, there's I think four major parts in the paper. There's the change in issuance, which is partly enabled by the conversation around liquid staking. There's interchain security, interchain scheduler, and interchain allocator. So, I'd love to dive into all of that. Um, let's start with the monetary policy first. I think honestly, this is the most boring part of the paper, but this is what it starts with. So I think we got to kind of break that down first. So what is new with the monetary policy with Atom?
So it's helpful to know a little bit about the way that Cosmos chains are set up today, which is kind of targeting a certain security level, which is 2/3 of tokens staked. Basically, it's a PID controller. So if greater than 2/3 of token holders are staked, then issuance will change in order to reduce that staking level, and vice versa. If you drop below 2/3, then you want to increase the security level, so you increase issuance. And occlusion, and Zaki's been kind of spearheading this project to introduce a new module, liquid staking, into the ecosystem. And this really just changes the security regime radically. So there's an expectation that most of the Atom token holders are going to be staked and issue liquid staked assets. So there's an opportunity and really a need to change the monetary policy because this stake ratio targeting no longer makes sense. So we've done some security analysis. We're actually going to publish a kind of follow-on paper that goes into more detail on this, but the paper gives a sketch, and the idea is that we can basically move from an exponential issuance regime into a sub-exponential regime, and we can actually just really issue linearly, so we can have tail emissions that are fixed. So that's the the main kind of concept. And then because we no longer have this adaptive issuance model, and the kind of purpose that is suggested in this paper is to create this economic zone. There's some capital, upfront capital required to do that, and so there's an initial issuance to kind of kickstart that process.
Got it. So let's see if I can kind of synthesize that. So it sounds like because now that liquid staking is a thing, we don't really need to emit as many liquid tokens and just flood the market with Atom. So we can actually have a lower emission over time. But then in the short term, you guys actually want to increase emission into a treasury to fund development. Is that kind of roughly the plan for the monetary policy?
I have like some there's some like optics questions that have turned out to be more important than we anticipated about how the treasury gets funded, which is I think what's important about the way things work is we do not think that Atom can generate sustainable revenue with its like current like with small tweaks to like we still want to reward stakers and we believe that like Atom holders should be more than just like a fixed emission meme coin, right? That it should actually capture real revenue from the world. That again, like so these are the things that are important to us. The second thing is like people have gotten very hung up on the paper's proposal of like a rapid emission of 55 million tokens into the treasury. I think it's a very important thing to understand that like what the paper is really trying to get at, the core idea the paper is trying to get at, is that such a treasury should exist, and that if the treasury is going well, i.e., we are deploying capital, generating profits, making like we a success is achieved, that like the treasury can scale to the point where it represents a meaningful fraction of the total set of atoms out there, and it can continue to pay for itself. I think we're talking about tweaks to the paper to like clear up the optics about because there is a way of interpreting what is being said is like looking like a lot of dilution, and that is not the effect nor the intention, but maybe it is excessively subtle in the current version of the paper.
Yeah, I did see that community response initially from some people when they saw kind of, oh wow, a lot of the initial emission would go to a treasury. Like, what is this treasury being used for, and so on. So I'm sure there will be a lot more detail around that soon. But one quick question, I want to double click on the point about liquid staking because I've not been able to find an answer on this. So if there is, a liquid representation of an underlying stake and the stake is slashed on, wherever it's staked on, what actually happens to the liquid representation? Does that like introduce any risk to Cosmos or?
So what we did with liquid staking is we have not enshrined any one single liquid staking protocol as the answer. Instead, there is a very robust market in the Cosmos ecosystem of liquid staking providers. Stride, Lido, Persistence One, Quicksilver, and there are like I don't know. There are more. There are always more coming. Like it is like people are very excited about this as entrepreneurs. So we have like great founding teams building protocols, and I think for the answer is what happens when someone gets slashed. For every one of those protocols, it's a different answer. And really what we want, what the goal of the occlusion liquid staking module is to like accelerate the adoption and accelerate the growth of the marketplace so that like the market can choose which among these solutions and which among these answers to like what happens when your atoms get slashed to your liquid atoms, that there can be there will be many answers to the question, and the market will choose. What do they want to use in DeFi? What will people accept as collateral for stable coins, and all of this stuff that we want in the expanding atom economy.
Got it, got it. So it sounds like there is a multitude of possibilities there. But yeah, that was a little bit of a tangent.
Pluralism is the way of Cosmos. Like our
I love
answer
that.
to any question is pluralism. What do you
I
want?
love
Pluralism. What should Cosmos be? All possible answers.
Yeah, that makes a lot of sense. And I love to kind of dive into the most exciting part of the paper, which is the part about interchain security and these new features called a scheduler and an allocator. So let's talk about interchain security first, because this is really important. And with this enabled, basically app chains can soon rely on Cosmos Hub or Atom stakers to secure their chains instead of bootstrapping their own validator set. So I guess is the correct analogy here that app chains can become more to Cosmos Hub what rollups are to Ethereum today, or is there this difference there?
I think that the answer is a bit has there's a nuanced difference here, um, which is so one of the things that so there are a lot of reasons why things might be built using interchain security. Because interchain security gets you like really interesting properties that are somewhat okay. I mean, there's some commonality with rollups. It's not undeniable. I will say that in many ways, like one of the things that's cool about interchain security is like with rollups, it's like how are you going to bridge? What is how do you get a decentralized sequencer? All of that stuff. With interchain security, we have answers to all of these questions right now. Now, are the sort of asymptotic security bounds and asymptotic scaling properties of rollups better than the asymptotic scaling properties of interchain security? Yes, rollups at the asymptotes are better. And I'm a big believer in Celestia, and like the modular future too. But like we find a bunch of different reasons why you might want to build something with interchain security. One is you just want to add a feature to an existing blockchain, and an existing token, but you don't want to add all of that complexity into the core system where bugs, etc., might cause the whole system to halt. And so, part of our motivation has been, hey, we can get, so this allocator, the scheduler, can all be built as interchain security chains. The next thing we find is that there are third parties who want to build applications that are clearly value creating for the ecosystem or value creating for Atom, but they do not want to have their own tokenomics. And one of the biggest things is we've never really had great answers for people who want to build things on Cosmos using the app chain with a full app chain hypothesis. You could run smart contracts on top of Evmos or Cosmwasm or Juno or all of these things, but we never had a great answer of, hey, I just like want to build an app chain, but I like don't want to, and like here's the value creation story. We don't know about tokenomics, we don't know about security, we don't know about bootstrapping. We haven't figured that out yet. We may never figure it out. So we've never had anything from them. And interchain security has also given us a product in that genre. And so. And then I think that the third question is it gives a project a great opportunity to collaborate even closer with the Atom holder community. Like we've seen these collaborations of like, look, we did an airdrop, but that's a one-time, single instant in time collaborative moment. Then the communities immediately diverge as like people sell and other people buy, and they like go off in their separate directions. By building on top of interchain security, you have ability to like align your community and the Atom holder community and collaborate. And that collaborative idea is a big motivation between having the scheduler and the allocator to actually have a tangible way of in protocol expressing those collaborations.
Hey guys, I'm really excited to tell you more about one of my favorite products in crypto right now, DYDX. This is a team I've known since 2018, and they've built one of the best exchange venues out there that also happens to be decentralized and mobile friendly. Now listen until the end because there's an opportunity for savvy traders out there as well. And here are just a few reasons why I like DYDX over other exchanges. First, it's very liquid. It processes $2 to $3 billion every day in volume and has 35 perpetual swaps as of this recording, which means you can trade things like Ethereum, Bitcoin, Doge, Solana, and most of the most popular assets with up to 20x leverage in the venue today. Now second, it's also extremely cheap, and if you're down bad from the bear market, you don't have to worry about gas fees at all because there is no gas fee on Starkware Layer 2 where DYDX is built on. Now that brings me to my next point as well. It's incredibly fast. Unlike other layer 2 and high-speed DEXs, you don't actually have to wait to withdraw your assets anymore. And as an additional point, by using Starkware, DYDX also provides user with increased security and privacy. And my personal favorite feature is the cross margin feature, which means I can seed one account with USDC and trade across multiple markets from there without needing to start sub accounts, because I really hate managing so many different sub accounts. And their iOS mobile app is also live right now, and it's amazing because it's compatible with MetaMask, Coinbase Wallet, Coin98, Huobi Wallet, and a lot of the most popular mobile wallets out there. And it's available for people outside of the US or sanctioned countries today. And one last thing, one exciting opportunity is their competitions. The most recent tier in the $10,000 equity tier have won over $95,000 in rewards. And you can get started with as low as $500 in equity to compete for prizes. So if you're already trading, might as well get paid to do it. So if any of that sounds interesting to you, I highly recommend that you head on over to dydx.exchange to learn more. And I thank them for sponsoring this episode.
Yeah, and we're gonna have to dive into what the scheduler and the allocator actually are and the kind of the motivations for that. But before that, just to kind of get some intuition here. Now, given that a lot of the app chains now can basically have their transactions validated by Atom stakers, will this greatly increase the opportunity for MEV extraction, given that, a lot of transactions are happening between different hubs? And maybe that's a good way to actually start talking about the scheduler as well.
Yeah, I can start to talk about this. So the way that interchain security is structured, the Atom validators are also validating on what's called the consumer chains. It's kind of the equivalent of the rollup. And so the validators will have information about both of these chains. They're concurrent processes. They're run separately, but there's already that the knowledge of the state on the other side of the network. So there certainly are MEV opportunities there. And the scheduler is definitely a kind of acknowledgement and way of kind of being more precise and deliberate about those arbitrage and kind of information sharing across domains.
So actually, what exactly is the scheduler? Can you maybe explain it through an example of how it might work in reality?
So it's a new construct, and it's a little bit unique to the Cosmos architecture. So the idea is that in Cosmos you have a lot of control over the node binary. So part of that control is basically how block space is structured, who has control of the transaction inclusion at a certain point in time. And what we realized is that we can actually tokenize that control at some specified time in the future, and we can trade that. So what we're proposing here is basically chains can opt into this system where they reserve some of their block space at a regular interval and offer that in a shared market. And then the purchaser of that reservation can redeem that NFT effectively at the specified time with a set of transactions. And so they have kind of exclusive access to that block space at that moment in time.
And what is like an example of an application that would use something like this? Because this is quite unique, right? And just to make sure that I understand it correctly, it sounds like with this scheduler module enabled, app chains within Cosmos would basically be able to say something like, hey, every 5 blocks, I'm going to sell one of these blocks to whoever wants to buy it. And I'm going to sell this in the form of an NFT, which the holder can come redeem for block space later on. But I'm struggling to understand, what type of applications would go out and buy an NFT and kind of redeem block space like this?
So the purchaser, we actually, one of the primary buyers we expect to be a Flashbots like entity, so a block builder, because the futures market for block space is actually going to be a kind of materially different product than the spot market, effectively. They will likely resell block space to their customers with a different set of guarantees. Um, that's a bit of an abstract answer, but needless to say that we think that there's going to be a very interesting market structure for block space futures versus spot.
And that is such a massive concept as well. So I want to make sure we understand it. So how does the redemption actually work? So say I buy an NFT that represents, let's say, a future block on Osmosis, and I go to Osmosis and give them the NFT. Do they have the right to just say no? I don't want to, I don't want to honor your redemption, and what is the mechanism to kind of prevent that from happening?
Yeah, I could take it. So, the a bunch of teams inside of Cosmos, Informal, Osmosis, etc., have been developing this extension to Tendermint called ABCI or ABCI 1.0. Back in the good old days of 2015, Jay created this idea of separating consensus from application. He called it ABCI. It roughly was not majorly changed until this new ABCI++ proposal. And the idea is with ABCI++, you can program every step of the program every step of the consensus. So one of the things you can program is the conditions under which validators accept a block. So it becomes relatively easy with ABCI 1.0, which is the next Tendermint release, Tendermint 0.37 has, to write a rule that says, hey, we got this IBC packet from the scheduler blockchain. It says that block 6,000, the top part of the block, needs a signature from this public key in order for you to vote for the block, or you can vote for an empty block. Those are your options. No other block is valid. And you can plug these block validity rules in. And so now the protocol can guarantee delivery of these things.
I see. That's really interesting. So it's automatically enforced already. And I also love that example of kind of Flashbots using something like this. And is this the first example of a futures market for block space, or has there been other attempts that you guys have seen before? Like, what inspired this?
We were inspired by Carl's work on a block space futures market proposal for optimism. I think Carl Flourish and other people on the Optimism and Ethereum Research Foundation team and the Ethereum community we're talking about this idea of I think even back in I gotta say 2019 maybe, we're talking about this idea of doing a block space futures market as a way, but they ran into a bunch of problems that we conveniently have solutions to. We have so you can we can deal with the censorship problem, for instance, by only having the top of the block auctioned rather than the entire block. So you can have we can separate the builder and the block proposer and so you can this can become a mitigation of censorship concerns. Because we have IBC, we have a protocol by which multiple blockchains communicate with each other. So if you want to have a unified auction, it doesn't have to be centralized. It can actually run on a blockchain. And so we take a lot. We stand on the shoulders of giants. I think Optimism's work is credited in the paper. We have been very excited about different ideas from Flashbots and stuff like this. But this idea of futures and spot market being separated, I believe, is somewhat novel. And this idea of using ABCI++ to do it is also novel. So we're very excited. These are But somebody will tell me that there's some forum post that they wrote on ETH Research or someone else that like predicted all of this like 5 years ago. So I'm sure that the things will be thrown. We tried to cite everything that was out there.
Yeah, that makes sense. And I guess on the project side, right? So on the app chain side, say like what's the incentive for say someone like Osmosis to integrate the scheduler? So I understand on the Flashbot side, like there's a lot of value prop for them, but for app chains themselves, like why would they want to integrate this?
So first off, it's purely elective. There's no one is required to use this. So the idea is that it needs to be value add to any chain. It's being sold to these chains. And the way that I've been thinking about this is that um, a chain like Osmosis is very likely going um, internalize a lot of the MEV within their own chain. Um, and Osmosis is actually already doing this. They're doing arbs between pools in protocol, and so that's expected and encouraged. Osmosis does not have a way to kind of manage multilateral relationships between other chains, and in fact, eh, if they need to establish a relationship with every single chain in order to kind of optimize cross-chain arbs, like that uh, that takes away from their focus on their core business. So that's kind of like where this product is focused. We there's a real value in aggregation, and for Osmosis to have a single counterparty um, for capturing at least some of the value of multi-domain MEV.
And I'd love to kind of also touch on the allocator as well, which obviously is a big part of the paper. I think this is the part where people seem to have the most kind of trouble with understanding. So the scheduler makes a lot of sense in terms of creating a futures market for block space. Now, what exactly does the allocator do, and how does that fit in with the scheduler?
Yeah, totally. Um, so uh, I'm sure Zaki, you'll agree that oftentimes we'll get asked the question like from new Cosmos chains, like how do we or projects that are about to launch, like how do we kind of align with Cosmos? Like we want to be integrated into the ecosystem. We want to have a close relationship with the builders. We want to make sure that that we're connecting with the community because Cosmos has a really strong and kind of politically conscious um, ecosystem, and there's no avenue for collaboration apart from kind of information sharing at this point. So there's a demand for economic um, integration and exchange that is just not being satisfied, and so that's kind of um, that's one thing that the allocator is trying to solve. On the other end, there's this kind of phenomenon of targeting Atom for airdrops and kind of uh, new Cosmos chain go to market, and um, and this has been an interesting phenomenon to kind of watch play out, but it's not really a sustainable strategy for ecosystem growth. So we kind of like step back and try to think about this from first principles. Like, okay, we want to make sure that Atom continues to be kind of like more economically integrated as the ecosystem matures, and that it really token holders, atom holders, and the hub itself is able to get exposure to ecosystem growth because it's kind of the hub is really sponsoring a lot of the infrastructure development. So the allocator is basically a way um, to get that exposure and to kind of like have uh, a more collaborative relationship with these new projects that are launching through getting exposure to the underlying tokens.
God, so yeah, I think that's I think I understand the motivation for the allocator now, basically facilitating smoother and better economic exchange between different app chains. But I'm still quite vague in terms of like what the allocator actually does. So is it like a tool for people to do airdrops across chains, or like what is it allocating?
So mostly what the allocator is a tool by which the Cosmos Hub can hold non-native assets in various ways, shapes, and forms. Where it can say, hey, so it can either delegate, assets to like groups of humans, to DAOs, and say, hey, DAO, like, use these atoms and go out and try and, generate like, we think a deal with Stride, like we think growing the Stride liquid staking ecosystem is important. We're going to delegate a bunch of atoms. You guys decide like what you specifically should do for it, but you are going to be piping the profits back up to the Cosmos Hub. That is, that's one aspect of it where you delegate some stream of funds to that. Other ways in which are purely algorithmic, right? Where we target a certain asset mix through a governance vote, and we use mechanism to sort of have people arb and buy assets, buy atoms, and like sort of inspired by Olympus DAO a little bit, and other PCV mechanisms to sort of achieve an asset mix from a certain amount of token emissions. Both of these things are sort of what we constitute in the, but it is we are asking for sort of it comes down to this idea of building new governance features that can then allocate funds to applications whose job, like there are like at least three different teams: Simply VC, Defract, and I forget what the other one is, that are building like ETFs type instruments for Cosmos. I have a project called Sommelier, which like makes strategy tokens. So Cosmos Hub could decide, hey, we want to like own a bunch of those strategy tokens, or we want to, Osmosis. Osmosis wants to build an ETF token out of Ion. Forgot about that. So like, and they want to call the token IBC. So like, the Cosmos Hub could vote and say like, hey, like we would rather take like a million atoms and own and like trade them for IBC and own IBC rather than those atoms, because we want that synergy. So this is the kind of model. And then, but there's the other piece, which is, hey, like once you own a bunch of assets, you also have to manage it, which is like this ability to like rebalance and like algorithmically, or have an algorithmic asset mix adjustment portfolio rebalancing strategy. Is critical to the allocator module succeeding. Did I do a good job, Sam?
In the kind of monolithic paradigm, you see, Ethereum has intrinsic kind of alignment with some of the projects in their ecosystem because they're issuing assets on Ethereum, and that's just like not, the
Mm.
road that Cosmos decided to travel down. Um, but we still think that Atom and the Cosmos Hub is like an important kind of leader and and collaborator within the ecosystem. And so this is borrowing concepts from international trade and and political alliances to actually create that alignment.
Yeah, I really love that way of phrasing it because basically Cosmos is trying to maintain its pluralism and allow people to create all these customized app chains, but also at the same time find some way to unify all of the value in one place and have Atom have exposure to all of that value created. Um, so I think that that's a really, really interesting challenge. And that actually reminds me of another feature that I wanted to touch on, which I don't think was really talked about in the white paper, but this was covered during Cosmosverse, which is the recent Cosmos conference. This thing called mesh networking, which allows different app chains to validate for each other, which I thought was really, really interesting and really fits in this theme about cross app chain synergy that you guys were talking about. Is that something that's, on the roadmap immediately, or, just a theoretical concept? And what do you guys think about that?
I can take my stab at it. We've really been struggling. So there have been things that there. Okay, so there are things that Cosmos teams find um, like really offensive from a design point of view that like we like are like explicit rejections. So we reject like sort of randomly chosen committee based security. We think it's that's really scary. And so that's like sharding. Um, and you see this stuff in production in Near, and it's really cool. But if anything about like the BSC attack over the weekend, over last weekend, has taught me anything, it's like my suspicions about what software might be more fragile than you think are going to take longer to play out than you think, and it's going to take years. And so I've always been really scared of committee based security, so we don't like that. And that's what Polkadot and Near do. We don't like. We think that like arbitrary subset based security is essentially proof of authority networks. So that's basically what Avalanche is doing with subsets, where you like elect in a subnet. So what we actually, I think we're converging on like what the Cosmos team believes are forms of shared security that are robust. One form of shared security is the interchain security idea, where you do full replication, and then the mesh security idea works really well. So DeFi chains have this problem, which is this like imbalance between TVL and staking, um, and like value at risk and TVL, right? And so you have the Gravity Bridge right now, which has far more USDC bridged over it than the value of its staking token. And so you have these imbalances. Superfluid staking, which is like a great innovation from the Osmosis team, is the first attempt to address this imbalance, right? Which is to say, hey, let us use your token in both DeFi and in both our DeFi platform and in the application layer, or in the staking layer. And I think that's so far been performing well. But the next idea is, hey, we're in this economic relationship with each other. We're Canto, and all our TVL and a large portion of our TVL comes over the Gravity Bridge. Why don't we have mesh security between us? So I think we're probably finally. I think mesh security is a major sort of cognitive innovation about we want to make the interchain security thing less rigid and more flexible, but we still want to keep with our design principles as Cosmos. And I think it is typical fashion. Sunny has really shown us a very interesting direction for Cosmos. But it's less clear that, and like mostly what I want Cosmos people are like, there is some sort of competition between mesh security and interchain security. And I'm going to say that our experience seems to indicate that there are going to be people who want mesh security. There are people who want interchain security. There are very few people who are going to be like, "Ooh, which one should I pick?" They're like, "No, I have tokenomics. Like, I want to make my token valuable. I like have this all figured out, but I want to borrow. I want to be able to buy security, rent security. I want to have security like across our economic relationships. I want to like map security to our economic and trading relationships." And then there are going to be people who are like, I want affiliation with atoms, or I don't want to have tokenomics. I want to choose interchain security. That world is like completely separated, and I don't view them as competing at all. But is not a vision. It's not part of the Atom 2.0 vision development direction at all to build mesh security. It will have to get. There will be hopefully new mechanisms within Cosmos for funding it.
I think if you ask anyone who's building a Cosmos chain, like they no chain is an island. It is a very collaborative ecosystem, and the direction that everyone is heading is towards economic, political, integration with one another. Security is a super important ingredient, but it's a starting point actually. It's a means to an ends, which is further collaboration, trust minimization for bilateral relationships between app chains, the ability to create a substrate for higher order application logic and the ability for future collaboration. So actually, some of that stuff is in the paper. It's just framed in a slightly different way. I'm fully on board with the general idea.
Yeah, and I think that's a great way to kind of wrap up the conversation. So today we've talked about a lot of very specific ideas, but I think it all ties back into creating a more unified economy for Cosmos and for more value to flow back to Atom. So I'm going to ask the last question, which I'm sure a lot of Atom holders are thinking and a lot of developers hate to answer, which is, what is the timeline for all of this? Like, are we talking about a few months or a few years of rollout, or what does that look like?
So there's a I'll talk about just like from a developer point of view. So like the liquid staking stuff that Cosmos that is in the white paper was all developed by Occlusion over the last year with the financial support of the Interchain Foundation, which we are very grateful for. But the Occlusion team built all of that. So that's actually ready to be merged with Cosmos SDK and will be part of the default new staking behavior of the Cosmos SDK. The scheduler is a thing that can be built. So Interchain Security is scheduled to go live in January. The scheduler is something that the Interchain Security team is very excited about. We all gotta, hopefully we could stop fighting about issuance on the internet and like get back to reading multi-dimensional auction papers to figure out how to build that piece. And then the allocator, I think, is probably has been in R&D mode for about 3 months, but is still it still has a lot of open questions about building it. And then for the governance stuff, we have this groups module that has been written that is going to allow us to build a lot of the governance stuff already. So again, timelines are unclear. We have to pull a team. We have to pull both existing and new teams together for this. It's hard to get started until we have some sort of, until we have a vote of the Atom holders to sort of align around an idea, which has been the political process that is going on right now. But hopefully, once we're past that, we get into this like team building phase and, we can build this shit.
Yeah. The first two parts, interchain security and liquid staking, have a kind of notional commitment from the Atom holder community. There's been prior votes and a lot of development work, and those are going to come online estimated Q1 of next year, so very soon. And really everything else in the paper is still being discussed, and we're hoping to get all the token holders on board.
Yeah, definitely. And I think that is an incredible note to wrap this up on. So thank you so much, gentlemen, for coming on the show again to explain to us all the ambitious plans that Atom 2.0 has. I'm really, really excited to share this out with the community. And yeah, thank you so much again. All right, that's it for this week's episode of the Blockcrunch podcast. So thank you so much for tuning in. If you enjoyed this episode, please make sure to subscribe on your favorite apps. And in case you didn't know, this interview is also available as a video on YouTube. And if you tag the Blockcrunch on Twitter this week and tell us what you liked about this episode, I'll be sure to respond to you as well. Now, if you'd like to go even deeper, we have a VIP tier where every week or so, we write an in-depth research brief or investment memo on a project. And we'll have exclusive AMAs with myself where I answer all your questions as well. Now, we already have analysts from some of the top funds and companies in crypto as subscribers. So if you're serious about getting an edge in crypto, head on over to theblockcrunch.com/VIP to learn more. And once again, thanks for supporting the show, and I'll see you next week.